CT Automotive. Now, this is an interesting one. I held these, and then my stop loss kicked in. And I held them because they came out with a quite good trading update, almost a recovery play. They're in an industry with I don't know much about. I don't know. You need to, as long as you know the figures, as long as the figures stack up. So literally, I think I bought here. I don't know what the trade update was, but rallied. No, it must have been here. Must have been this trade update. It rallied, didn't last long, and just fell off. 20% kicked in, took me out. Then the results come out, come up again. But still, it's still by sort of buy price. So let's have a look at what they do. Oh, food again, lovely. CT Automotive, and in fact, this is where the ranking system last week will come in handy, because they've shot up the charts. They are now this week's number 11, scoring 83, and they were down at like. This is the thing about looking at trade updates. They're a preview of what's to come. You sort of knew from the trade update what was coming, and they are improving. So, in fact, let's look at what the final results said, and in fact, you can see CTA. So, full year trading update was 23rd Jan. So they said here, look, the group returned to profit already, first line, pretty much. So they are a developer and supplier of interior components to the global automotive industry. Obviously slumps. I don't know why it's recovered though, but they do all little bits of the plastic infits in the dashboards and all that stuff. They say the ground has returned to profit. The strong H1 performance continuing into H2 as global automotive production volumes continue to recover. I don't understand why that is. So revenue is expected to be not less than 140 million. What? An improvement from 124. And they also balance sheet strengthened. They got some debt. They did a fundraise in H1, $9.6 million. Year-end net debt expected to be 6 million, down from 12 million. No, reduced from 9 million, sorry. There we are. So they've reduced quite a bit there. And in fact, so they come up with their sort of, let's look at their final results. And they say, and in fact, the director here, the NED, I think it was, Nick Timberlake, which is Justin's obviously brother. He's in the automotive. He's not a good singer. He can sing in the car, but he's not good. 60,000 shares at 67 pence. Well, what's that, 40 grand's worth? Let's see what maths is. Times 0.677, 40 grand he bought. So he's 40 grand. That's not bad for an NED. 40 grand a share. Bought that after the results. He's confident. Someone's confident. So this is the results. As you can see here, underlying EBITDA improved massively. It's all improved, isn't it? Or profit before tax. That's going down a bit. But this is what they do. Do they show you pictures? Oh, that's what they do. So all those bits in cars, bit stuff around the windows, you put your arm on, all that stuff in the lights, fittings. That's. Oh, where's it gone? Oh, in fact, don't worry. Oh yeah, all that ventilation systems, all those little bits. That's what they do, and they're saying the automotive is recovering. Automotive, I don't know much about that. I don't know if that's true. But anyway, share price 67 pence. Target price from the broker 140, 108% upside. Market cap 48 million. Enterprise value 51. Oh, it's in the red. Little bit of debt, more debt than cash. So the volume, of course, again, very liquid. Revenue 112 million. This is I've converted this to pounds, okay, because that's how it works. Operating profit 6.6. Cash. Oh, sorry. If you click on these buttons, you get this coming up. Explainers. Cash, but 7.4 million cash, but 10.4 debt. But operating cash flow, as long as you're generating cash, that's fine. You can chip away at that. Nice. So they got, look at that, growth, value, momentum, all good. All good in the hood. Health is a little bit questionable. Efficiency is a little bit questionable. Potential decent. So health, and so all this is quite good. Top line is 15, but everything else improved. Value's okay. Price to book, don't worry about that too much. EBITDA is all good. Okay. The health, but now I'm assuming that's going to improve because they're generating cash. But with manufacturing companies, their margins are going to be quite small. Now they've gone down from H1, top line gross margin 21, operating, but the return on capital employed, which is quite good. Now, if you want to know what that is, basically to assess a company's profitable and capital efficiency. The ratio can help understand how a company is generating profits from its capital. So the money they're using, to working capital basically, how profitable, how efficient are they at using that, the money they have? So it's basically assets, take away current liabilities because they'll be gone within 12 months. And those the remaining assets, how much profit are they making off that operating profit? I think that's Warren Buffett's favorite metric, pretty much. But it's all good and good. But let's look at the forecast going forward. Oh, okay. So the forecast going forward, not a huge amount of growth, but nevertheless, the margins are improving. So even if they don't have much growth, if the margins are improving, then of course there's more cash to the bottom line. And like I said, the value going forward looks tremendous. Very good, all in the green. So even on a 0.4 sales multiple, 4 EBITDA, 8 post-tax, I'm saying 7, I'm maybe a bit tight on that. I'm saying 18% upside. Like I said, the only thing questionable here is the health, which can be sorted out, and the margins, which seem to be getting better. So anyway, what's your thoughts on CT Automotive? Ladies and gentlemen, what do you think? CT Automotive, cheap forward PE, but no top-line growth according to Librum, actually due to go down. But profit before tax is expected to ramp up over the next few years. Yes, Nat says no, too much debt. Very difficult and competitive sector. My cousin works in the sector. Very interesting. You've got to think, when you're investing, I suppose, what does this have? What's their USP? Is this the kind of company you think, I like this company, you tell your friends about it and you think, oh, that's interesting? Or is it like, oh, okay. Sometimes that's the judge of it, but nevertheless, you still make money on it, And in fact, people who've made loads of money, they tend to say, I like boring companies. I like predictable, boring companies. That's how you make money. No exciting tech stocks, predictable, boring companies. So, but nevertheless, you always have to. Rob says, no, not enough USP. Graham says, CT, yes, one to watch. Okay, so yes there. Mark V says, no for me. Ed, no, revenue has been going sideways for the last 5 years. It's supposed to be a tough industry. They say there's recovery on in that industry, though, so be interesting to see, how they get on. But I think it's worth the watch. Paul says, yes. Gareth says, no. CTA debt is a burden. And, sorry, yeah, Paul is slowly drinking away there. Yes. Everything. Spot on. CTA debt is written. CTA, yes, the watch is possible upside. Phil says, but tight stop loss. Ooh, watch your tight stop losses, mind. They may hurt you.